through this. All right, once again, you're very welcome to today's webinar. You're very welcome to today's webinar. My name is Heritage Adisa, and today, within the next 1 hour, we're going to discuss choosing profit targets. Choosing profit target. Now, this is a very, very important topic for a lot of us that are traders, a lot of us that have been trading for some time. For some of us that are extremely new as well, you're probably also wondering, yeah, that could be something interesting that I could work with. Or you could be wondering that, oh, I've been trading for some time. I have a system of choosing targets, right? Is there anything new to this? Is there anything I'm doing wrong? Is there anything I need to add to what I'm currently doing? And we're going to look at this topic very quickly, very detailed, so we have a fairer understanding of what we need to pay attention to when we choose our profit targets. As a trader, it is quite important that you remember that the primary reason why you opened an account with HFM, why you decided to get started in the first place, is because you want to make extra income. Profit is really, really the bone of the major motivation. Yeah, you could say you like trading and all of that, but at the end of the day, all our motives fall back to you want to make extra income, and profit is the way you do that. So, how can I properly target? How can I properly set a target in my trading, right, on a daily basis or per trade basis? What should I pay attention to? What should I look out for that can help me improve in what I am doing? Now, before I do that, I want to quickly run us through very quickly the major points that we're going to deal with in this our class. Very quickly, the major parts of this our class that we're going to look into, and we're going to take it one after the other. So what I have a notepad here where I have simply listed out the things that I want us to look into. Number one point we're going to look out for is discussing profit targets. The topic is choosing the targets as well. What do we look out for? How do we make these decisions? Is it per trade? Is it measured in pips? Is there a particular way to do this? We'll look at average true range. I'll discuss it. We'll look at using support and resistance basically to make these decisions as well. We'll look at the concept behind having a fixed number of pips for stop loss and take profits when we trade. We're going to look at that as well. We're going to look at risk to reward ratio, because this is something that a lot of people discuss as well, right? What is risk to reward ratio? How do you use it? Is it something that you should use on a daily basis? How firm should you be when you use risk to reward ratio? We're going to look at that. We're going to look at how long to leave your trades running, right? Because some people talk about, oh, you hear questions like, oh, should it be based on the time frame? Is it that when I'm on a 1 hour time frame, I should leave the trade running for 1 hour, which may not necessarily be correct. So we're going to look at how long, we should allow our trades play for under allow trades play out. And we're going to talk about a bit of the right mindset when it comes to trading. The right mindset when it comes to trading. So quickly, the idea behind trading, when it comes to trading, I've mentioned that we want to focus on making extra income. I want to believe, before I go on, that everybody in this class has been or have been trading for some time. You're not extremely new to this particular part of the business. You've been trading your experience. Now, if you are not, if you're totally new to trading, you've never really traded before, or you probably started, but you've never really gone through any detailed training session relating to the markets and trading, I would like to invite you to join the HFM Foundation course. It is a course designed to lay the foundation for you in speculative trading, in forex trading, in CFD trading, right? Every single information that you need to get started, right? What you need to know that trading is about, how it works, how you can get started, how to place trades, how to use the trading platform, how to find quality trading opportunities, where to go looking for such information, how to interpret such information, basically generating trade ideas. And having generated these trade ideas, the next thing will now be execution, right? These are the things that we run through in the HFM Foundation course. Execution, right? How to use strategy, how to place stop losses, how to manage your risk, how to use the right or how to have the right psychology. We discuss all of this at the HFM Foundation course. Now, I'm saying this for those of us that are extremely new to trading, and probably you've not gotten to the level where you want to learn profit targeting, because there's some things I'll be talking about that you're probably not so familiar with just yet. So I'm saying that you can always join the foundation class. It runs physically on site at our education centers in Lagos and in Port Harcourt. In Lagos, the address is 90 Allen Avenue. 90 Allen Avenue, Ikeja, Lagos. In Port Harcourt, it is 77 Stadium Road, Port Harcourt. 77 Stadium Road, Port Harcourt. So we have the physical classes running in these centers for free. Once you have an account to HFM, your account is approved, you can join the classes, right? 10 a.m. in the morning through Monday to Wednesday. 10 a.m. in the morning through Monday to Wednesday. We can start from there. And if you're in another location outside this space, you're in maybe because of work, you cannot make it down to the classes. The classes also run on those same days, Mondays to Wednesdays, weekly, but online. So you also have an online version of it that starts by 3 p.m. in the evening. You have account managers. An account manager is your relationship person with HFM, with the broker. So when you open an account, you assign an account manager who basically relates with you, relating to your business with us. So you can reach out to your account managers and then they can give you the link for the training so that you can also get the right foundation, and the things that we're going to be learning in our webinars going forward would make more sense to you. These webinars continue. We have them mostly on Fridays. So please stay tuned to HFM social media handles as well as the HFM Telegram channel, right? And then we can see how we can pass more useful information to you to help you be better in your trade. All right. That being said, now you've learned to trade, you've started trading, you've been setting targets. What are you supposed to look out for? How do you determine where to take your profits? How do you determine how much to make or to target per trade? Is it based on just the number of pips? Should it be the same across board? Should it be a situation where you're more focused on the situation in the market? What exactly do I do? What exactly are you supposed to do? How exactly do professionals approach the market? When it comes to trading, profits are important. But a lot of us sometimes, or let's say some traders sometimes, do not approach this in the best way they should. And in that case, they end up having trades that price moves in their favor, but they cannot properly utilize the profitability on that trade, right? They don't get to take the most out of the opportunity on that particular trade. Why is that the case? Why? Very quickly, you see, profitability in the market, first of all, is not based on your number of pips income targets. No, that you make profit or not is not because you put 30 pips as your profit target or 20 pips as your profit target. That's not the case. Profitability stems back to your decision making. That is what you have actually taken as a trade, what you actually bought, what you actually sold. That's what it goes back to. And as a trader, you have to have that information very clearly spelled out. The information, right? What you look out for in the market, the kinds of decisions that you make as to what to buy and what to sell, it's very important. And you must, under every circumstances, pay attention to that. Now, when you have made the right decision as to what you're supposed to be buying what you should buy, selling what you should sell, and you now come to the point where you are trying to execute the trade, execution is also very, very key. It simply is saying that you enter into the market based on your technical strategy. But having entered based on your technical strategy, you also have to set your risk parameters, what we call stop loss and take profit. What we call stop loss and take profit. Take profit is simply a target on your trade. That is, if price is going in my favor and it gets to a certain level, I want the trade closed, right? I'm looking to make this amount of money on my trading capital, on my trading capital as my profit. That's what a profit target is about. We call it take profit. Now, in trying to set take profit, how do I know how many pips to work with or not to work with? There are different things that you can work with, right, when it comes to doing this. Some traders will hear, or maybe some places that you've learned to trade before would tell you something like using a specific number of pips for their profit targets. So you hear things like, oh, on my trades, I always set a 20 pips profit target. Or you hear things like, I always set a 50 pips profit target. Or you hear things like, oh, I always set, there's always usually, some people have a fixed target for their profits in the market. Now, that may not necessarily be bad, but that may not also be the most efficient way to approach trading when it comes to profit targets. And I'll explain why. Every trade is unique. Buying Euro USD today from a particular level is not the same thing as buying the same Euro USD tomorrow for another level. Each trade has its own unique drivers. For some, they could correlate, but most of the time, they have their own unique drivers. They have their own different motives behind different market environments, different volatility levels, right? Different liquidity levels in the market. And as such, your targeting when it comes to profits and risk should also be unique based on that particular trade. One shoe size cannot fit everybody. In the same way, 30 pips could be appropriate for one trade, but it doesn't necessarily mean it to be appropriate for all trades. Could be appropriate for one trade, but it doesn't necessarily mean it will be appropriate for all trades. How do you know? So I always give this, what will I call it now? I always give this disclaimer, let's say it like that, right? That you don't necessarily have to, change your style if you feel like a fixed number of pips for profits as well as risk on all your trades works best for you, right? My job is not to change what you're doing. It's just to help you see things from another perspective, right? A more efficient way to getting things done in the market, which if you now like, you can adopt. But I know that if you consider it, you could have a far better experience in the market. Now, if you feel like having certain 50 pips take profit on all your trades works best for you because it allows you with structure, it gives you, some level of, you know, consistency in terms of structure. Let's just say structure, and you want to keep doing that so that you have a fixed way. It helps into your plan, it fits into your plan, and you just do that, and it's working for you. By all means, please continue. But in a case where it's not working for you, right? You have your trade set up, you have the right idea as to what you want to do, or you are looking for a better way to approach the market, then you can use a more dynamic approach to certain targets in the market. The first way that I do this is I use support and resistance for my take profit and stop losses. That's the first thing. The first thing is I use stop loss and take profit for my profit targets and my risk. For those of us that have been trading, I'm sure you're familiar with what support and resistance are. They're simply ways that we step into the market based on the levels, right? Now, what I try to pay attention is when I'm trading, where is the next support? Where is the next resistance? Right? I like us to put this down, maybe just in case, you don't this for support and take for support and resistance. Let's just do this now. When you're buying, I'm trying to put this as a note so that you can also have something visual that you can work with. Set your stop loss below the next support. When you're buying, obviously you're buying at support. Identify the next support, the lower next support, and then set your stop losses right there. below the next support, and then take profit at the next resistance. When you're buying, set your stop loss below the next support and set your take profit at the next resistance. That's just me. Then on the next level, we say when you're selling, just so that you have that statement, when you're selling, set stop loss above the next resistance and set take profit at the next support. There you go. When you're buying, set your stop loss below the next support and take profits at the next resistance. When you're selling, the opposite. Set your stop loss above the next resistance and take profits at the next support. What do I mean by this? Let me show you what I'm saying. I'm going to cross over to my MT4 very quickly. I want to just show you something very practical. This is why, I'll explain why I choose to do this, and then we'll look at it together if it makes sense. So this is a chart. It's just a random chart, right? Let me see if I can um, clean this up a bit better. I know some of us may have some questions. Let me see. Yeah, sure. I'm going to. This one is asking that can you please use a visual representation for this support and resistance, right? Like a chart or something. Yes, that's what I'm about to do. So let's look at that now. This other one says that, please, which item of the agenda are you trading? I'm trading support and resistance now. I left ATR for now. I'm trading support and resistance now. So let's go. All right. Right, you can keep your questions coming in. I may not be able to answer all of them now, but I'll attend to them as time permits us to do so. Now, this is a chart. Now, if you do not know how to set support and resistance, you don't have a basic understanding about what support and resistance is. Remember, I already discussed the foundation course with us. We can always start from there. But in very short terms, let's just really put up, levels of support and resistance right here on this chart, and then we'll run through. All right, so we have 1, 2 very quickly. Let's just see what we can do here as well. All right, here you go. I think we should have another one around here, by the way. Like I said, if you don't know why I'm putting the lines on my screen, please, not to worry at all. Right, you can probably not attended the foundation class yet. Let's just run through that. Now, let's say for some reason, right, for some reason, right, you want to, sell, just as an example. Let's say you're choosing to sell from this particular level, right? Let's just see if I can just place an order to sell right now. Just since price is already at resistance, just put an order to sell very quickly. I just want to show something. By the way, decision to sell is not usually a guesswork. It's not usually just because of support and resistance, right? It's usually based on, analysis that we should have done. This is just an example to show you how things are done. Now, so let's assume we're trying to sell from here. Now, what I'm saying is, since I'm selling at resistance, the statement that we had earlier, if you look at the statement, right? Look at the statement that we had, right? It says, when you're selling like we're selling, set your stop loss above the next resistance and take profits at the next support. So in that case, where is the next resistance to where we're selling from? Obviously, this is it. In this case, this is the next resistance area. Right? I'm saying that you set your stop loss just above it. So you can just drag it and then just put stop loss around here. Above, just what I've said. Stop loss just above, your entry price, the next resistance. And I was saying take profit at the next support. That's what I've said. That's all I've done. I've simply just looked at the levels of support and resistance, and anchored my targets as stop loss and even take profits at these levels. Why did I do this? Does this make sense? The idea here is simple. We must understand that even when you do your analysis and you've decided what you want to do in the market, you're still not certain of what the outcome will be. Based on information, there is a high probability the price moves in your direction, but there's also a chance that you're wrong. Now, what you also have to understand is even if you're wrong, which is why you should set a stop loss, or let's say even if you're correct, price may not necessarily start moving in your direction right from where you decided to enter into the market. Price may not just move down like this. You may not always get this. For a lot of times, people don't even get that. You most likely will get something like this. Maybe even sometimes price pull higher before even happening like this. You could have that situation. And in a case where you just put your stop loss just anywhere, picking any number, you could be in a place where you have your stop loss, price oscillates higher before eventually moving lower, hits out your stop loss. Now you've taken a loss between this and this. You're taking a loss, and then price eventually moves in your direction. And for those that have been trading for some time, you would agree with me that that can be very, very, very painful. So this, what I'm showing you, is a way that we can better utilize this, right? Better set this so that it makes more sense to us. We are allowing enough room for price to oscillate, like I like to call it, right? What do I mean by oscillation? Price to move up and down. We're allowing enough room. We're also saying that in a case where price moves higher before it starts going in my direction, right? I'm leaving enough room for price to move. And I'm saying that price should not have enough momentum to break through resistance and keep going higher. Mind you, we've done our analysis. We expect price to go down, which is what we are paying attention to. So in this case, in a case where price moves higher a little bit before going down, it should not have the momentum, that's the word I have, right, to break through resistance areas higher and higher and higher. The next layer of defense, or if it even rises up to the resistance level, it should hold and price should start moving from there. So me, I'm hiding behind that, above that in this case, such that even if it gets there, that can also help hold price and move price lower. That's the logic behind this. And for the target, take profits at the next support in this case. I'm saying that as price is moving in my favor, yes, it's going down as I expect. When it gets to the take profit level, when it gets to the next support level, I could expect some form of reversals. I could expect some form of pullbacks, right, in the market. So I'm trying to say the next point where I could expect some reversals, that's where I'm getting out on the market. That's where I'm stepping out of the market. That is why I'm putting take profit at that level. I am simply trying my best to see how I can anchor and play my take profit and stop loss into the formation on the chart, because the entire market cannot see the number of pips that you have in your mind. I repeat that. The entire market cannot see the number of pips that you have in your mind. What we can collectively see are the levels of take profit, of support and resistance. So if you anchor your target and your risk based on these levels, you have a far better chance in the market. You have a far better chance of being in trades better, or even staying in trades more than a situation where you just get knocked out just because of little price retracements. If you are having a concern that, oh, the number of pips between your stop loss now in this case, right here, and your your stop loss here and your entry price is too much. The risk is too much. Let's say in this case, I have about how many pips now? Let's see. I'm trying to see how many pips is it. All right. So this is about 64 pips, right? And you feel like for you, 64 pips is too much when it comes to risk. That's okay. This is not a law, it's a rule. You can always adjust accordingly based on what you're trying to pay attention to. You can always adjust accordingly. You could decide to use another target, another level as your resistance area. You can do that, but apply this all the time. By the way, time frames are also key. The next resistance in this case could be 64 pips here. But if you're trying to trade sentiment and you're on a 15 minutes time frame, for example, the next resistance level may not be more than 30 pips. So you also have to look into that. But applying this can work for any time frame, can work for any instrument, and is very efficient when it comes to your targeting for stop loss and take profit. But for me, I do not get to reduce it. I still maintain this. But if I feel like the potential stop loss, the number of pips and the number of dollar loss I would incur if I'm wrong is something beyond what I can handle, I tend to reduce my volume on my lot size. So I do not trade, let's say I would normally trade 0.1, a mini lot. If the number of pips for stop loss is too much for me, I can reduce that from that to, let's say, 0.05, half of that. So in that case, if 0.1 gives me $1 per pip, for example, and I'm having a stop loss of about 60 pips, now that's $60, and I feel like that's too much for me. By cutting that in half, I can still maintain the same number of pips, that's 60 pips for my stop loss, but now because my volume is now 0.05, basically half of that, my loss is no longer $60 if I have a loss, but now $30. So you could also apply that in your trading, making adjustments according to your levels. But what I'm saying in essence is one of the ways to efficiently set profit targets as well as stop loss targets is, number one, anchor them around your support and resistance levels. If you're selling, set your stop loss above the next resistance and take profit at the next support. If you're buying, set your stop loss above, if you're buying rather, set your stop loss below the next support and take profit at the next resistance. Now, that being said, we're going to move on to the next one. I know that we could have some questions. Please keep them coming in. Keep them coming in. We're going to go into, more details in our analysis. The next point I want to quickly touch on is average true range. Average true range simply says the average number of pips that a pair, or let's say that an instrument, is expected to move in a day. Sometimes you could say in a day. You could also look at this more than in other time frames. But let's look at this. And this is based on the recent volatility in the market on that pair, let's say on that instrument. So this is it. Now, average true range says the average number of pips that an instrument is expected to move, right, based on recent volatility on that particular instrument. So when you look at your trading platform, let's say you have, did I share that screen to us? Let's be sure that I did that. Okay, I did that. Now, let's go back to this. Now, back to our trading platform. We can look at certain stop loss and take profit based on, ATR. For the MT4, if you go to insert indicators, by the way, you could also, I'll give out my number after this. So in the case where you have a question we cannot handle right now, or maybe you want to use certain steps, details that you missed in the class, you can call my attention to it. I can see if I can also help you with that. But if you come to my MT4, this also worked on the phone, by the way. Insert indicators, and you go to, I think, customs, you should see ATR somewhere. ATR. Right. So if you check this ATR out, for those of us that did not get that, let me do that again. Insert indicators, customs in some cases, you can see ATR. For some people, they already see it here. It's here because I've already used it recently, but you could also go to customs. You can also see ATR. Now, if you click on it, it would ask you for how many periods. That's talking about how many periods. Right? How many periods do you want to measure the volatility for? Now, in this case, the default thing that we made there is 14. I like to leave it as 14. I don't like to change it, but then you have that. Right? I don't really change any other setting. I just leave it at 14. That's if I want to know for the last 14 periods. If you want to know it for more or less, you can adjust, but I leave mine at 14 and I say, okay. It usually pops up like a small graph at the bottom of my screen. And I personally do not really pay attention to the graph itself, but the number at this corner. If you look right here at the corner of my screen, there's a particular number right here. Right here. In this case, That number is about 0.00080. Now, what I do is once I have that, I quickly change the time frame. Once I've done this, I've put the ATR, I change the time frame from whatever it is to the daily time frame to D1. I change the time frame from whatever it is to D1. What I'm saying and why I'm doing that is I want to look for the last 14 days. Remember the period says 14. So if you're on 1 hour time frame, that 14 will be 14 hours, the last 14 hours. But since I want to know per day, hence why I'm moving to a daily time frame just to check. Just to check, right, what the number of pips averagely is per day. Now, if you look at this number, it says 0.00492. What does this mean? It's the last numbers I'm looking at. 492, 49 pips and 2 pipettes. That's what it's saying there. That this particular instrument, NZD-CHF, over the last 14 days has moved an average of 49 pips, 2 pipettes. If the number you have there is 0.00800, that means it has moved an average of 80 pips, 0 pipettes. If the number you're having there is 0.00555, it means that it has moved an average of 55 pips, 5 pipettes over the last 14 days. Now, how does this help me? Once I have done that, so I've known that based on the recent volatility, this particular pair has moved an average of 49 pips, so let's say 50 pips, right? When I'm doing my technical analysis, trying to put my take profit target, I have to factor that in because it says that if in the last 14 days, this particular instrument has only moved around, say, 50 pips daily, total pip movement, by the way, it means that today, barring any major news or major, high volatile events, I could very likely remain within that. That's what it means. So if that's the case, as a trader, I must factor that in as well. All right. Let's see. I was looking at some questions are coming in. All right. Yeah. Some questions are coming in. I want to make sure that we're not missing anything. Right. All right. We're not missing anything. I'll get into answering some of them. So just give me a second. All right. Back to what I was saying. All right. I believe we're still on. Okay, good. Good. Thank you. Now, what does this mean for me? Now that I've known that number to be around 50 pips, it means that if, for example, I want to trade today and this particular pair, right, has an average pip movement of 50 pips per day, it means that today I have to look at how many pips it has moved in total today already. Whatever is left in that 50 is what I should look out for if I'm expecting more movement. So let's assume that today, for example, between the highest points of price and where price currently trades at, right? Let's say I want to sell. Price has already moved about, say, 30 something pips already. It means that what is left, right, between that 30 something and 50 is what I should look out for. Today is a bit special because we had some major announcements early this morning where we had Israel attack Iran, and then there was a bit of play down. So there was a geopolitical risk today, hence why you're seeing the bigger movement. But look at yesterday, for example. Look at the total peak movement, or the highest top to bottom yesterday was basically around, say, 15 thereabout. The previous day as well, price was around, let's say the top even was around, let's say 40 something. The previous day as well, that would have been, I think, Tuesday. The total peak movement, if you look at everything from the lowest to the highest point, was around 20 something. So you notice that in recent time, price hasn't moved much. If you don't have any major change, that means you can also expect that. So if, for example, the average true rate is about 100 pips, for example, and today that asset has already moved from up to down of about, say, 40 pips, that means that what I have left is 60 pips. My take profit target should stay within that. I wouldn't even put 60 pips. I'll most likely put something like 50, 40 something, most likely. Are we on the same page? It's what I'm going to do. So you can also consider ATR when you also do your profit targeting. The next point here, I want to quickly run through them. Just keep your questions coming in. I would attend to them once I can. The next point here is fixed number of pips for stop loss and take profit. I already mentioned this earlier on when I started. I said that you can choose to do that. Pips for SL and TP if you need it for, right? Comment, and TP if, so you can choose to have a fixed number of pips for SL and TP if it works best for you, or if you need it for structure, if you need to have some form of structure in your trading. But being dynamic about SL and TP, applying them based on a case by case basis, right? That is what I mean by that is per trade, can help you to be more efficient with SL and TP, right? So just so that we have that information as well, right? So I'd already explained this earlier. I just want to also mention that in the next phase. Now, the next part is risk to reward ratio. And I think I saw a question relating to risk to reward. I want to make sure that I don't miss that. The question says, let me see. Please, let me just answer this now. Please, what if the risk to reward ratio in this scenario does not blend? Like if the trade happens to go against your analysis, what then do you do with that? So this is one of the things that answers that particular question. This other one says, all right, I think this also relates as well. Please set my stop loss and take profit based on support and resistance levels, either buying or selling. How do I also reconcile this approach when I decide to use 2% of my balance as SL and 6% of my balance as TP? Now, I'm going to quickly attend to this very quickly. You see, what we mean by risk to reward, right? Right. Let me say it's um, a ratio between the SL and TP. Basically, let's just say that's what risk to reward there talks about, right? A ratio between SL and TP. Now, it's saying very clearly here what I do between stop loss and take profit. So I can say a 1-to-2 ratio. The 1-to-2 ratio would mean for every $1 risked, for every $1 or let's say 1 pip risk, you're looking to make $2 or 2 pips. So this is what I mean by risk to reward ratio. Now, a lot of people have this. A lot of people have it as they have a fix. They can say, oh, so their own risk to reward ratio is 1-to-3, where they risk 1 to make 3 times what they're risking, or 1-to-2. Some people have it as much as 1-to-5, and you hear things like that. Risk to reward is not a problem. It's not so bad. But I personally believe that it may not always be as efficient when you apply it to trading, because it could help you. It sometimes allows us to be overly expectant in the market, overly expecting price to behave in a certain way or reach certain levels when the numbers right in front of us spell otherwise. For example, if you use the ATR and it has shown you based on calculation that over the last 14 days, this particular pair has moved an average of 60 pips. Let's use that as an example. And now you're trying to take a trade, and because you have a 1 to 3 risk to reward, you're looking to risk, say, 40 pips as your stop loss. By the way, price has already moved 20 pips. So based on the 60 pips average true range, what is left is 40 pips. But you are trying to risk 40 pips or 30, whatever it is, let's say 40 pips for your stop loss. But because of your risk to reward, you're trying to make 3 times that because your reward is 1 to 3. So because you're risking 40 pips, you then put your take profit target at 120 pips. And the total movement that these assets can even move is only 60 pips. It has already moved 20. So that means that what is left based on recent volatility is like 40 pips, but your own target is 120 pips. You can see that it is not likely for your target to be hit. It's not likely. So it's important that as a trader, you try to, not be too rigid with risk to reward and pay attention to what is right in front of you. Another example is if your potential target based on risk to reward is beyond the next resistance area, if you're buying, for example, price can easily get to resistance. That's moved in your direction already. You're already up about 30, 40, 50, 60 pips already. But because your target is way beyond that, you're still waiting and price hits resistance. Those that are buying start to take their profits, unwinding their positions, closing their trades. Sellers also try to struggle at resistance, and what was formerly in your favor starts to reverse. And it's reversing because of profit taking or because of even the resistance areas or sellers coming in at resistance right there. And then you have made such a number of pips before, you're starting to lose that lost profit. And then the fear of lost profit starts to creep in. You start to hope and pray that it reverses back in your direction. And then it just becomes a mess. So I feel like instead of being so rigid with risk to reward, how about you're more attentive to what you can see on your chart? Because the market does not know the number of pips you want in your mind based on risk to reward. What the market can collectively see are the levels on your charts, the ATR, the numbers that you have on your trading platform. And I think that's a far better way to approach it. Now, I'm not saying that risk to reward is not useful at all. That's not what I'm saying. I'm saying you can, but don't be overly rigid with it. Pay more attention to what you can see on your trading platform. That's one. And number two, when you use risk to reward as well, right? Try to be flexible. I think I mentioned that already. Try to be very flexible. In a case where price is approaching resistance areas and you feel like the momentum is no longer there, you feel like it has moved up already well in your favor, get out at the next possible bus stop. Get out at the next possible bus stop. Now, if you now feel that the trade still has more potential to ride beyond that, it's okay. But you must have an understanding, a clear reason why you have that expectation and not just purely based on what you want in your mind. I want to believe that that part is clear, right? Now, I want to run through these very quickly because I don't want to stay too much beyond this. Now, for the person that asked the question of how do you approach or start this approach if you decide to use 2% balance as your SL and 6% as your TP? This is still risk to reward 1 to 3. I'm saying that you can do that, but having that as a fixed target may not necessarily be the best way to approach the market, because the 6% you may be talking about may be underestimated if the average range is way beyond that, if the next resistance is way beyond that, or it may, in most cases, overly estimated. And then you're in a trade that has moved well in your direction, but because you did not pay attention to what the overall market is paying attention to get out at the right time, you then have a situation where you're in the trade, and then price has gone in your favor, but because you're expecting it to do what price is not likely to do that day, you keep waiting and waiting, and then there's some reversal, change in sentiment, profit taking, and what profit you had already made before, you give everything back to the market. I believe that part is clear. Now, let's see. What are my thoughts on one-to-one risk to reward? Is it easier to achieve? Is it worth it? It's easier to achieve. Is it worth it? Of course it's worth it. Now, this is it. I understand the part where we want to make a lot of money in the market. I want to make a lot of money in the market, but you must also understand how the market thinks and what is achievable in the market. Mind you, we're not coming into trades just on the back of, I'm just trading based on the technical analysis alone. Please get this correctly. That's not what we're doing. We're not saying that, oh, I came into the market just because of support and resistance. No, remember, we've already done our analysis. We've done our sentiment analysis, fundamental analysis. We've generated a good trade idea. We're only using the technicals as our way of executing trades. So if that's the case, if that is the case, we must remember that it is a function of price already moving up based on X, Y, and Z. I'm only looking for a way to efficiently be in the market and get out at the good time. So if I have a good trade based on my analysis, but then I can't achieve a 1-to-2 risk to reward, all I have is a 1-to-1 risk to reward, I personally will take the trade. Now, you are not me. You may feel different about that. You may feel like you must achieve a 1-to-2 risk to reward before you take a trade. Like I said, if that works best for you over time, you could choose to stick to that approach. But I would not give up a good trade just because I cannot get a 1-to-2 risk to reward. As long as I am in a good trade, as long as I have a very high conviction level, high probability for that particular trade, I would take the trade. And by the way, you can always modify your trades as price moves in your favor. I can always reduce my stop loss. I can always trail price with stop loss, trailing stop. I could always do that to further modify the trade, but I would not leave out or miss out on a good opportunity on a good trade just because I cannot achieve a 1-to-2, 1-to-3, 1-to-4 risk to reward. I hope that answers your question. So for me, it is worth it. If you not feel like it's not worth it, then you can choose to leave it. Okay. All right. Let's see. Quick one. Let me see. I think let me run through this because our time is up. We have just a few more minutes to go. Allow trades play out. What I mean by this is do not be in a hurry. To jump out of trades. If price moves a little in your favor, or a little against you. You must understand that prices do not move in a straight line. That has to be clear. Prices oscillate up and down. And there's barely a lot of times where, or there's almost very little chances that you find that you buy now and price starts jumping up now. Except maybe you jump into the market in a very high volatile environment. But most of the time, what you realize is price first stays within an area, moves a bit up and down, sometimes even against you a bit before moving in your direction. If you have a habit of saying, oh, price is moving in your favor, and it moves a little bit, and you're like, oh, this little is fine, I just want to take this and move on, right? If you have that mentality, you're cutting your profit short. Most of the time, you notice that people that do that, they don't usually cut their losses short. What they do is they allow the losses run and feel like it would reverse. And that's psychology, where you're allowing your losing trades run. But then your winning trades, you're closing them short, trying the guys that you want to take the little profit you've already made. You're doing the opposite way you're supposed to be doing because you're supposed to allow your winners run and cut short your losers. And I think this forms, or this is happening mostly because sometimes we're not very familiar about how the market works. Sometimes lack of proper risk management, which makes it seem like a little move in our favor is at all, right? Or a little move against us is it will reverse, right? If you've managed your risks properly and you're saying that if price goes against me, I already know the total number of pips I'm willing to risk. I already know how much I am willing to risk on this. If I'm wrong on this trade, this is the exact amount I'm going to risk or lose in the market. If I already have that information, I can easily allow markets move because I know the worst possible outcome and I've accepted it. So you should also consider that. But I feel like allowing your trade play out, once you have determined from the beginning of the trade what your potential stop loss would be, what your profit target is, right? You've managed your risk adequately, leave it alone. Allow the trade to move in the direction that it's going to do and take you out where to take you out. Only adjust when objectively there is a reason to, and not because you are afraid or because you're scared, or let it not be because of emotional control. Let it be because you can clearly see that, oh, the reason why I was in this trade is no longer in this trade, is no longer active. Or the reason why I was in this trade is no longer in play. Or market sentiment is no longer in line, or you're no longer feeling the trade. You don't have strong conviction about the trade anymore, but not because you are afraid that you lose the profit you already made, or you're afraid that price would continue to go against you. Allow your trades play out. That's a way better way to approach the market. And finally, psychology, right? And that's what I just talked about not long. You see, as a trader, you must understand that having the right approach or mindset to trading is important, right? Let me write it down. You must remember that you cannot win every trade. And every trade is an opportunity to learn. Manage your risk, right? Learn from your mistakes, have emotional control, and be disciplined to follow your plan always. This works on me. You can't win everything. So in a case where price is going in your favor, don't say you will keep holding it till it reverses in your direction. If it's no longer in line, you're wrong either because of a change in market condition or because you omitted something when you're doing your analysis. If that's the case, then close out your trade. Never lose big. That's a law you should have as a trader. You could win small. You could win big. Try to win big. You could lose small. You could break even. One thing you must never do is lose big. And I think the right approach, the right mindset to trading can also assist you in doing this and doing this better. Right. Now, our time is already up. I just want to quickly run through the questions that we have. I don't want to take longer than I need to. I'll give out my number just in case anybody has anything you want to, share outside the class. We can always deal with that. But let us run through this very quickly. Okay, so I think I've done this. I think these are questions ones that we had earlier. I'm just quickly close them up so that I know what I'm dealing with. Loud and clear. Okay, let's just leave all that out. All right. This one says, how do we know where to draw our resistance and support lines? Now, this is something that we learn at the HFM Foundation course, the third day of the class, usually on Wednesdays, right? Usually on Wednesdays. So that means that please, if you don't know how to draw support and resistance areas, kindly join the HFM Foundation course. It runs Monday to Wednesdays. I discussed this earlier on in the day. Once you have an account, the account is approved. You can join physically at our education centers, right, in Lagos and Port Harcourt by 10 a.m. or you could join online by 3 p.m. Right, your account managers would have the link and they can share that with you. All right, this one says, let's see. What is hedging in trading, and is it a trading strategy? Hedging is simply opening a counter side of an already open position, right, in hopes to mitigate the risk. So what that means is I'm buying Euro USD, price is going against me, and then I decide to sell the same pair on that same account, such that whatever my loss is on the first trade would be accounted for in profits in the second trade. Is it a trading strategy? Not necessarily a strategy, but it could be a way to more like, pause on a bad trade already and do something, right? So that your losses don't necessarily increase at a fast pace because one loss is being mitigated by the other one. But it's not a long-term strategy. It's not something that can work long-term because yes, you pause the loss at that time where the loss you have at that particular point continues to be what it stays around. But you've got to decide what to do next fast. Are you trying to add more money to the account to give yourself more margin? But I feel like that only complicates the issue. If you're doing it with CFDs in the market like this, it complicates the issue because eventually you have to trades on your hand where price could even settle in the middle where both of them are in losses. There's that. But then you have to trades on your hand. And now you may not be able to manage that properly. I feel like if I'm already wrong on a trade, I am wrong I would rather close out that trade, take that small loss and move on than complicate it by opening another position, right? Not because I did any analysis to help me understand why price should move in a certain way, but because I'm afraid that I now complicate the entire thing. So I don't see it as a strategy. It could be a way to more like mitigate risk briefly based on, maybe you want to add more money to your account, you want to quickly, get something done. But most of the time, when people use hedging when it comes to speculative trading, they did it out of fear, they did it out of confusion. And I feel like it may not always be a good approach to the market. It mostly complicates trading rather than help it. Okay. This one says, can one apply the two methods of setting stop loss and take profit on one trade? Because I am asking because I see where traders set different levels of TP. Yeah, you can set different TP. Now, I'm not certain of this, but I don't think there's a way you can literally set 2 to 3 profit targets on a trade, literally on the MT4. It's just one room for TP. But there are ways you can have different levels where you want to take profit. So you buy at 5, for example. That's the price you buy at 5. You can say that, okay, when price gets to 8, you want to close portions of your trade. So maybe half of your trade you want to close when price gets to 8, and allow the remaining part of the trade to run to maybe gets to 10 and you close the other half. That's what people use as different profit targets. I don't know if you can do that automatically. I don't think so, but you can do it manually where you partially close some parts of your trade. And yes, you can apply different take profits in that sense, not literally, but by closing portions of your trade as it plays out. If you don't know how to close portions of your trades as it plays out, you can always, join the classes, maybe the foundation course or the advanced classes on Thursdays, and then we can look into that in more and more detail. Okay. This one says, I've always had this issue of jumping out of trades, most especially during liquidity grab. What could you advise as you later regret it? If you already know you've done this 1, 2, 3, 4, 5 times, and it mostly doesn't work and you regret it after, why not stop? Why are you jumping out is the question. Are you afraid that price could go loads and loads and loads against you? Or are you saying that, oh, the little profit you've made, that's enough, you want to take that and move on? Because you've got to be able to answer that base question. Now, if the question is, oh, you're afraid that price will go more and more against you before you close out the trade, predetermine your risk. Set your stop loss ahead. Allow the trade play out. If you feel like, oh, if you take the profits, at least you've made 1 pip, 2 pips, 10 pips, 15 pips, let me just take that one and move on. Yeah, fine. But that's not effective long term, because if you keep doing that, don't forget you're cutting short of your winners, right? And then the numbers won't end up at the end of the day. So it's something you have to also look into. I don't do that. Once I've determined the only reason I'm going to jump out of the market is if the reason why I was in that trade in the first place is no longer valid. If it's no longer valid, that's the only reason why I will be, jump out of a trade. All right. So that being said, very quickly, our time is up. I don't want to keep us longer than I need to. Mr. Harris, is it wise to risk more than you stand to gain? Let's say risk 40 pips to get 20 pips. I often want to compare it with buying a product for 40K and selling it for 60K, thereby making 20K profit. But can you think this can be applied to forex trading as well? Well, I don't really have a problem with this personally. I don't. Sometimes I have trades where the risk is more like the same with my target. Sometimes. Now, I know a lot of people don't like that idea, but I look at it as if I have a quality trade, I will not miss out on it just because I don't have a good risk to reward. That's how I see it. But if you're not okay with it, please don't do that. If you're not okay with it, please don't do that. I don't have a problem with this. Right? I feel like it's okay. Personally, I feel like it's okay. But and why I do that is when the trade starts to play out, I have room to adjust it. So when price moves in my favor, because it's a good trade, by a couple of pips, I can reduce my potential loss that I had before, reduce that stop loss. So I'm fine. But If you feel like you're not okay with this, you can stick to having a one-to-one, at least having where somewhat almost the same risk is what you're trying to gain. That could help. But I like this way you put it, and I don't have a problem with this. All right. Please, is this meeting recorded? Yes, yes, it's been recorded. We're going to see how we can put it on our YouTube handle. I think having some issues with YouTube at the current moment, but once we're able to sort that, we'll upload it on our YouTube page. The YouTube page is HFM Nigeria. So you can always catch up with that later on, and you can always, rewatch this if you need to rewatch this. Thank you, Mr. Elvis. All right. Um, Please, how can I know the average daily or weekly range of the market? That's what the ATR is about. I've shown us how to use this. Please, you can catch this video again if you missed that part of the class, right? I showed us how to use the ATR, so we can always do that to get that information, how we can use it. I showed us how to apply it. So if you want it for weekly, instead of using the daily time frame, you go up to the weekly time frame, and that will give us that information. All right. So this person is asking for let's see, sorry, this one is saying that does this apply to all instruments? Yes, it applies to all instruments, all time frames. You can always use these methods to place your trades. Again, this one is asking for my number. Now, for those of us that don't have this, I'll call out my number so that we can have that information as well in case you want to reach out for more questions or you want to reach out for more, whatever it is. Probably a chat on WhatsApp or Telegram could help. Just send me a chat. My number is 0810 0810. Time is up. 0810 491 8105. 0810 491 8105. Assuming that we're listening from Nigeria, that is the country code for Nigeria is +234. So in case +234 810 491 8105. So that's the number. You can always let me know if you have a question outside the class, and then we can always look into that via chat. All right. So I see some more questions. If there is no fundamental news about the trade, can I trade it? When you say fundamental, are you referring to data? If it's data, well, it's not data is not the only way to take trades. There are other catalysts for trades, but make sure there is a reason, either on the data side, full-time fundamental side, sentiment side. There is a reason why you expect price to go up or down outside the technicals. Is when you understand that you can now apply the technical analysis to find entry and exit into the market. All right. All right, so at this point, we're going to call it a day. We don't have the room to take all the trades. I'm going to type my number again. Some people are asking for the number. I'm going to type it again so that in case you did not get it. Right, so that you can always reach out to me via chat 0810 0810 491 8105. 0810 491 8105. That number is on WhatsApp. I'm sending it as a chat right now to the chat box. It's on WhatsApp. You can always reach out to me, and I would always look into answering more and more and more of your questions. Thank you, Mr. Elvis. I see your message as well. Thank you as always. Thank you. All right. So for the questions I'm not able to attend to, please you can send them to my chat box. I would look into them one after the other. But at this point, I want to say a very big thank you to everybody for spending this time with me. I mean, I do not want to keep us longer than I need to. So thank you so much for spending time with me. I want to believe that we have learned a thing or two. I want to believe that we've learned a thing or two in this hour session that we've had very quickly. Please keep trading, keep trying, reach out when you have questions or confusion, anything at all, and we'll see how we can assist you. Thank you so much for joining me this afternoon. It was a pleasant time with you. Have a fantastic rest of the week. Have some rest over the weekend, and we'll see you for our next webinars. These webinars are going to run Fridays, usually on Fridays. So please stay tuned to HFM social media platforms, HFM Nigeria across all social media platforms. We'll always update you when we have, and even on the Telegram channel, would also update you when we have the next webinar, the topic, and then the link to register and join. Thank you so much. Do enjoy the rest of your day. It's goodbye for now.